You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
But to be honest, Alan said it earlier, Alan and I have been at it for 13 years. With Osino, I've been at it since 2016, properly. It's been tough. And financing, the burden of financing has been weighing on my shoulders all those years. And to be honest, I had to be a little bit selfish too. And I thought, do I really want to do this again? Or do I want to tee up a nice package, ensure responsible and quality custodianship for the cornerstone asset, and at the same time think about my exploration team, make sure that they're funded, allow them to keep going. Yes, I'm giving up some of that value for shareholders like yourselves. I'm very conscious of that. But I think in the greater scheme of things, it was an acceptable sacrifice for me to make. But I do take it on the chin. It would have been a very nice feature. It's just that at the time, taking everything into account, we felt that we weren't willing to risk the DPM deal potentially by too much brinkmanship at that point in time, and that's why we decided to let it go.
My name is Bill Powers, and this is Mining Stock Education, and we're following up with a company that we featured, I don't know, maybe 4 years ago at this point, when it was below 30 cents a share before its first discovery, its greenfield discovery. I'm speaking of Osino Resources in Namibia, and Osino has just accepted an offer to be bought out by Dundee Precious Metals for cash and share consideration. So I invited Heye Daun, the CEO, on the show to share with us his rationale, as well as Alan Friedman, the chairman of the board. I also asked David Erfley, my friend from Junior Miner Junkie, to join, as we'll ask Heye some questions as a follow-up. So Heye, I kick it over to you. Could you please lay out the rationale for this transaction?
Yeah, Bill, before I do that, thank you very much for having us. I'm very pleased that we're here. First interview straight after the announcement, etc. And I'm also very pleased that David Erfley is here, because I know between David and you guys brought a lot of shareholders into the stock, and we take retail very seriously. So thanks for introducing Alan. Let me just say, Alan has been an integral part of Osino. He's a co-founder. He's been there from the beginning. He was always my man in Toronto, whilst I was down in Namibia doing the shoveling and doing the dirty stuff. He was hanging out with the brokers in the equity capital markets. And Alan did a fantastic job, always punching above our weight on the street. Unfortunately, in the last few years, as you know, there hasn't been much of a street. It's been very tough. I tell you, we really chose the wrong decade to do gold development stories. I mean, when we sold the previous deal to B2Gold in 2012, the market had already turned, and it was an okay deal. Financially, I mean, everybody made money. It was good. B2 made us look good. They built the mine, and we did it again with Twin Hills. Now, I can tell you, Bill, and by the way, thank you for this platform, because I can speak more freely here than maybe I could on the webcast earlier. It's been a very difficult decision, let me tell you that. As a founder and co-founder, having discovered this project, you want to see it through all the way to the end. But I'm a professional. We are professionals. We know we're old enough to have the right judgment, and a lot of things could have gone wrong. So clearly for us, this was a case of better a bird in the hand than, and I'm not going to mention names, but there are a number of recent examples where things went seriously wrong. So I think in a different market where the equity market would have given us more credit, we would have carried on our own. But I think at this point in time, particularly considering that we would have had to raise a lot of equity very soon, it could have gone seriously wrong. And this way, I'm pleased, I'm excited about it, because I do think that DPM is an excellent company. I think for your shareholders, or for your shareholders and our shareholders, for the shareholders that you guys brought in and our shareholders, I think it's a good deal because I wrote down a few points here. First of all, it's an immediate premium, of course. That's always good. You continue to have exposure to Twin Hills if you want to be, but you get that now as part of a diversified portfolio with some excellent other assets in Bulgaria and Serbia. You become part of a low-risk portfolio of assets in Europe and in Namibia. You've got much more depth of management in order to take this project forward. We are world-class explorers. Very good project developers, but not necessarily mine builders. We could have gotten there, but we weren't there yet. With DPM, you get yield. I don't know if you looked at the numbers. DPM, I think I read a few moments ago, 14% free cash flow yield. DPM itself is heavily undervalued. They started talking, by the way, I'll tell you a quick anecdote. They started talking to us 8 months ago. They offered us a much lower price at the time. If we had taken it, we would have re-rated by 60% since then. So, there's always timing. I'm comfortable that this deal is good at this point in time because it takes away that dilutionary risk that has sunk so many other companies at this point in the Lassonde curve. But yes, it has been difficult it is difficult to give up the baby. I don't know, Alan, do you want to add anything to that?
Yeah, no, absolutely. Thanks, Heye. And, thanks to both Bill and David. I know you've been very supportive of the company and having your platform promote our story when there's so many competing stories out there and some of them very good. It really appreciate that. Heye and I have been, firstly, we speak to each other a couple of times a day and we have been doing so for 13, 14 years. We originally came together as partners, and that's where we met actually on bidding for the Otjikoto asset. We bought that from Vale. We incorporated Oryx Gold, advanced that and sold it to B2 Gold. So that's where we met each other. And I was just lucky for that experience because it's not often that you have the opportunity to work with someone that you like working with, you have respect for. Hard work is hard work, but having fun around that as well. And we've become very good friends from that experience. That being said, we have a very complementary set of skills. There's no shortage of promoters on Bay Street that I can tell you. Promoters got like sort of a bad connotation, and I guess I'm one of them. But really, what makes a promoter a good one is having found a real executive. Real mining executive that understands not only how to, advance and discover projects and ultimately build projects, but really understand the economics of it and sort of the capital market angle, because there really are two different businesses that coincide, and that is one of the project discovery, exploration, project development on the one hand, and really how you handle capital markets, right? Raising money from the street at the right prices at the right times, keeping your shareholders happy. You got different opposing views from different shareholders, institutions, high net worth, retail, etc. And then you got strategic partners along the way, the likes of B2 Gold that are a big shareholder of ours, the likes of Ross Beatty, who has different sort of view than some sort of later stage retail sometimes, and keeping everybody happy and aligned is a full-time job. Having said that, building a project like this from inception, different to Otjikoto, which was we bought already a previously discovered and advanced project. We just advanced it further, sold it on. This is a baby of ours, but more particular Heye's. Everybody knows Heye is a Namibian, a very proud Namibian, and really this is his baby. He discovered it, he advanced it with a fantastic team, and giving it up is is more difficult than keeping it and struggling through it. And then having the maturity and the state of mind to know when to do that, I think in itself is really a compliment. And so this was not done haphazardly or easily. Many times Heye and I will be talking late at night and trying to figure out, is this the right thing to do, and is it the right time? Is really holding on for another buck, squeeze another buck out of it. But really, you got to know what you have in terms of your toolbox of skills and resources. And I think that's what it comes down to, is in this equity market, we've all just gone through really one of the worst markets I've seen. I've been on Bay Street for 25 years now, from South Africa originally. I started my career in Toronto in 2000. Been involved in many, stories, exploration stories, but quite frankly, this has been the toughest slope. No matter how much you execute, no matter what the metal price is, the equity markets just don't seem to care. And it's really, disheartening when you're advancing it at such a magnitude. I mean, from discovery to definitive feasibility, 2.5, 3 years, is really unheard of. And so with all that being said, finding the right time and the right partner to hand this over has been, a lot of trepidation, but I think that we've got a great comfort and confidence in DPM. They've been in country. They know they are well known by the regulators and the government and investors there. They know how to build a mine. They know how to produce gold. That's for sure. And we can be proud to hand the project over to them. And we're not giving up. We are still significant shareholders, 50% cash, 50% shares. And we feel that we're doing what's right for our shareholders. And only in retrospect, can you look back and say, was that time right? Was it wrong? And hopefully time will prove us right. I think it will. And regardless, it will be a benefit to our shareholders. And we're very confident with this decision.
Thank you, Alan. Thank you, Heye. Dave, before I hand it over to you, Heye, I want to kind of encapsulate some of the feedback that I've been emailed today and I've also seen online. I think it was about 2 years ago on my show, you said Osino would be one of the safest 5 baggers that you could get in the sector. You were probably about $1 per share or thereabouts now. So the bio price is about Canadian 155 per share cash and shares of Dundee Precious Metals in consideration. What would you say to the investors that bought 2 years ago expecting a $5 stock?
You know, I obviously cannot predict the future, and I hate talking about future share prices. So you caught me. You caught me unawares when I made that statement. The reality of the situation, I should add this to the general statements that Alan made earlier. You know, we had a very unique set of circumstances here, and you know, retail investors and institutional investors are different. Like every stock wants to migrate or grow out of retail into institutionals, and we did that. And when the sun is shining, that's great. But when the clouds move in, all of a sudden that's a problem. I can tell you that some of our large shareholders, I'm not going to mention names, have been experiencing extreme lows over the last 3 months. There's a Swiss fund, I know 20% of their fund flowed out in the last 6 months. So we've had a wall of selling and that into a situation where we have to raise equity. So I can tell you, I saw it on CEO.ca, some comments that were made today around it would have been quite possible that we would have been back at 90 cents because people smell of financing, et cetera, et cetera. So yes, of course, if we had slogged it out, I do think we could have been a 5-bagger off, I'm not saying off $1, off whatever. I do think that in the long run, there potentially could have been significantly more value, but return never comes on its own. It comes with risk, with volatility. And that's, I think, where the dichotomy was, because retail shareholders, I think David said it to me before, you guys don't buy into stocks for a 50% return or even 100% return. You buy into stocks because you want a 500% return. That's great when you can deliver it. But the institutional shareholders are different. And I think as we did well by migrating away from retail into more institutional shareholding. To be honest, in the last 12 months, that was a problem for us. The institutional shareholders did not help us. Some did, most of them did not, or a lot of them did not. And but unfortunately, we have to deal with the situation every day. And so I'm satisfied that everybody's in the green, everybody made money, people are part of a bigger something. I think it gives people a lot of choice. You can cash out, you can carry on, you can stay on. I know I love reading David's missives, or what should I call them, his pieces on Kitco and so. And David is right. I think when the market really does turn, these stocks will fly. But I think the producers and the intermediates will fly before the juniors and before the developers. And that's why I think, in the next 6 to 12 months, for shareholders to be sitting in DPM is going to be a great place to be. I really believe that.
David?
Yeah, well, first off, to both of you, congratulations on the offer. And I agree with most of what you've been saying, but I want to focus on what you said about you being developers and explorers. You're not mine builders, and I completely agree with that. And you did something remarkable. You took something from discovery to bankable feasibility study within 4 years, which is pretty remarkable. But I know we've had discussions in the past, Heye, about your exploration projects. The Ndudu and the Eureka discovery recently would be perfect projects to spin off into another company. So I agree with you saying that this is a great deal for shareholders as far as Dundee Precious Metals. They're a fine company. I mean, they're one of the only stocks that are going from the lower left to the upper right in the mining sector in the past few years, and they've done a great job with their projects, and they are a great partner to develop Twin Hills. But as a shareholder, I would have liked to have seen your exploration projects spun off into another company, and then your team could try to do it for a third time. Did you think about that? Did you consider it? What do you have to say about this option?
Yeah, look, David, you've hit on it. We thought about that very hard. We would have loved to have done a spin-out, I think, but in the end, we had to think about the totality of the situation. where on the one hand you had an acquirer that has had a lot of success with exploration. A lot of Dundee Precious Metals' own share price growth over the last year or so has been because of Choco Rakita, which is really a world-class, unbelievable discovery that they made in Serbia. So they're very exploration focused, and for them, getting access to the exploration upside within Osino was very important. So we had to take that into account. For me personally, I have to say maybe a bit of a personal angle that comes in here. Yes, I would have loved to have done the spin out, fundamentally speaking, as you say, it would have been a great way to put the icing on the cake, so to speak. But to be honest, Alan said it earlier, Alan and I have been at it for 13 years. With Osino, I've been at it since 2016, properly. It's been tough. And the burden of financing has been weighing on my shoulders all those years. And to be honest, I had to be a little bit selfish too. And I thought, do I really want to do this again? Or do I want to tee up a nice package, ensure responsible and quality custodianship for the cornerstone asset, and at the same time, think about my exploration team, make sure that they're funded, allow them to keep going. Yes, I'm giving up some of that value for shareholders like yourselves. I'm very conscious of that. But I think in the greater scheme of things, it was an acceptable sacrifice for me to make. But I do take it on the chin. It would have been a very nice feature. It's just that at the time, taking everything into account, we felt that we weren't willing to risk the DPM deal potentially by too much brinkmanship at that point in time, and that's why we decided to let it go.
So basically, it was a deal breaker. If you would have tried to spin that out, they wouldn't have gone for the takeover.
It's hard to say. You never know. But when you're sitting there and you're having those conversations, remember where those conversations started before gold's latest blip. But even in that bloody latest blip, excuse my language. So the share prices, and then back down to $1.10, $1.05. It's just ridiculous. How can we be in a situation where you have an all-time high for gold? Like, the best macro situation ever that you've described, David, and the market is just lying there in a slumber. And I that definitely weighed on me, because I thought, continue with Eureka and the remaining exploration upside, we would have had to finance again. We would have had to carry on. It would have been a slog. And would we have gotten shareholder value? Yes, I think eventually, yes. Optionality would have been there. But in the short term, it would have been continued heavy lifting, and maybe I just got too tired. So
I imagine you probably didn't have enough cash to spit out with the exploration projects as well.
We could have engineered it, but the reality is, let me be frank here. We are going to end the year with $3.5 million in the bank. Alan and I were always so conscious of doing the right thing for shareholders. So we managed to do successively higher financings, I think every time except one time. And so you can say we tried to finesse the markets too much, because we got into the situation where at the end of the year, all of a sudden we were, I use the sort of, I say we were lightly funded. We were not lightly funded. We didn't have a lot of cash. It doesn't mean that we were desperate. We would have financed ourselves, etc. We had Ross Beatty and key shareholders and others lined up. But it was a strong consideration, because then the spin-out would have been, I wouldn't say that the financing of the spin-out was the key consideration. The key consideration was ensuring a successful outcome with DPM. That was the key consideration. But in the back of my mind, I did think back. I sat back and thought, do we want to go this again with an exploration company in a tough market? And I just thought, no. Alan, sorry, I interrupted you there. Do you want to add to this?
No, I was trying to interrupt you by saying that because we lived this transaction, it wasn't well considered and brought up with DPM in the discussion. They know what they were getting, okay, and that exploration upside, and you can see in the presentation they gave this morning, and in the press release, that exploration upside was also very important to them as part of the value of this deal. So, I like Heye, I'm ready to get going again. I'm so invigorated. I need a few weeks on the beach because he's been more intensely involved. It's much easier sitting on Bay Street and having, meetings with brokers than actually being in the field and dealing with all the people that he does and the regulators, etc. But yeah, we did try, and I feel comfortable that we tried our hardest without putting the deal at jeopardy, because having DPM there, was important for us, and we believe it was the right partner.
But David, I think another way for you and Bill, for your shareholders to play this is with the next one that we will do. Because, Bill was fortunate in that his guys, I don't know exactly when they came in, but as Bill said, like somewhere around the 30 cents level, we started promoting it. David, I'm not sure when you came in, probably quite a bit later. But
I think my average cost is 45 cents US, 49 cents US.
I pitched it to David when it was 75 cents, and he waited until it dropped back down.
Okay. I tell you, now, recently the market sort of got a little bit of life left. But before that, like at the end of last year, when we were trading down to, where did we go to? I think 53 cents or 55 cents. And even then, towards the end of the year, 80 cents, etc. There were a lot of people out there. I think a lot of retail type shareholders, friends and family, etc., that were fatigued. In addition to the institutions, I think your guys, David, they're pros, and I think that for them it's probably more paid for because they can take it on the chin. But we had a lot of real moms and pops, and a wall, like I said, a wall of selling, and we could have worked our way through it, but it would not have been pretty. And I think there would have been a significant risk of us just treading water for a long time. And so this, at least we've created some liquidity. There are going to be other deals. People are exposed to a quality story. And, for me personally, also, it has always been very important. No one's ever lost money on my deals. And that's very important to me. Maintaining my reputation. That's why we think about the upside. I'm an optimistic, bullish guy at heart, but I have to force myself also to consider the downside. And that's what we did here too.
Heye, what were the change of control fees involved in the transaction?
You got me. I don't have the exact number. It's 4% of the value of the transaction. So it's around about $10 million. I have to say, I've got to be careful here because, as you can imagine, when you sign an arrangement agreement like this, there are some very tough anti-solicitation clauses in there. So I can't talk too widely about other parties, et cetera. Just suffice to say, I'm going to repeat or emphasize what Alan said earlier, which is we did this very thoroughly. We had a very thorough process. We had professional advisors involved. And in the end, we arrived at DPM because we felt it was in the best interest of shareholders. Of course, generically speaking, there's always the possibility of a superior proposal. And the arrangement agreement provides for that. We got top class legal advice from Stikeman and Elliott, in Toronto. They made sure that our interests are protected. And how that pans out, we have no idea. I think there's 3 months to go in terms of closing the transaction. I'm not trying to hold out a carrot or anything like that. This is standard deal protections that are part of any deal like this. The break fee is market. It's not high, it's not low, and we have no idea what would happen.
So to be precise, you asked about change of control payment. The break fee was actually 3.5%, which is right in the middle of the range, and that's $10 million. 3.5%.
Okay, not change of control; it's termination fee. Fee at the end of it.
A change of control is way less than that. Change of control, if you're referring to change of control of executives on sale, is that what you're referring to?
Correct. Your incentive potentially, if someone were to critique you.
Oh, sorry, Bill. Is that what you asked?
Yeah. So someone could say, well, did they have an incentive to sell at a lower price because I feel like they sold too low?
We can tell you. I'm not going to tell you what the number is, but in my case, it is 3 times the annual base salary without bonus. Like Alan says, it doesn't touch the side. Our position as shareholders was multiples of the change of control payment. It's very different to the usual management teams who have no skin in the game and who focus completely on the change of control payment. You're 100% correct in asking that question and challenging it, but I can tell you on that side, definitely not motivated by that.
I think it's the opposite. I think we were disincentivized to sell based on change of control. It would have been more in our interest to stay along and collect a salary, a check, get options and RSUs as we build a mine for the next 5 years. That would have been more in our personal interest because you just prolong it, right? And so we get salaries, but we are founders. We funded this company from inception together with shareholders. We wrote checks most of the times along the way. And, it's about the equity for us. It always has been. It's not about the fees. In fact, Heye is quite a hard taskmaster. Many times the board would approve bonuses. Then Heye would say, no, guys, it doesn't look right, although it's market standard. And we would literally turn down and only accept a lower bonus or a lower comp plan. So we've been very prudent all the time. So your investors should be rest assured that the change of control was not an incentive.
Sorry, I got that wrong on the termination versus change of control. But I wanted to make one more point. You know what really motivated me is to make sure that everybody looks good. I wanted a credible deal that makes everyone look good. Me, that makes shareholders happy. I didn't want any losers. And I don't think there are any losers. Yes, there could have been bigger winners. Yes, we could have pokered higher. We could have done that, but then there would have been the risk of potentially creating losers, and I didn't want that. And that's why I do think this deal makes everyone look good. It's a credible deal, and it's ultimately in the best interest of shareholders and stakeholders.
David, any final questions?
Yeah, going back to what you said about the carrot being dangled, it's basically if there's going to be another offer, I've been looking at Osino as a very strong takeover candidate for a while now, and not only myself but many others felt that B2 would have been the perfect partner, like they were the last time for Oryx, and they're also 9% shareholders, and Ross Beatty's an 18% shareholder, I believe. First question is I know there's confidentiality issues, so whatever you can tell me. Are they both on board with this transaction?
No, so let me just correct you. Ross Beatty is still the biggest shareholder, but he owns around 11% now. Obviously, with the financing, etc., he got diluted a bit. I'll tell you who the shareholders are. Ross, 11%. Alan and I and our family groupings in different baskets, forget the exact number, probably somewhere around 7-8%. Pat DeCarpo, Power One Capital Markets, also around 8%. And then Resource Capital Funds, also around about there. And then we got Merck out of the US, also very significant, a couple of smaller ones. So the key shareholders are all on board. Of course, I can't, there's a public forum, so I can't speak on behalf of them. But generally speaking, we canvass the key shareholders there on board. B2 Gold is an interesting one, and I can speak about it because, yes, B2 Gold was always going to be the company that would buy us. They've been a riddle, to be honest. I mean, they obviously bought Sabina, and they're having to do some very heavy lifting there. That's obviously $1 billion of capital, and they have significant problems in Mali. So I think maybe they just didn't want to take on another development project at this stage. I think that was more it. You can read at the bottom of the press release that we had two very professional advisors helping us on this for a long time. That's BMO and Treadstone. Treadstone out of Sydney, BMO out of London. And we did canvass the market quite well over the last year. When I say the market, the universe of potential corporate acquirers. We had site visits. We had some interest. I say some, not significant, because there hasn't been a lot of M&A, and the universe of potential acquirers out there, many of them were probably inward focused and focused on themselves. And to be honest, this was a consideration as well in accepting this deal, because we had to weigh it up and say, what's the chance of being able to get something better or somebody else, and we had to weigh all of that up. So, of course, there are always the wild cards. As you know, there could be, there are Asian groups that are acquisitive, etc. All those things we cannot predict. I'm just giving you a generic answer. It's always possible that one of those could come in. For us, we focused on making this transaction with DPM a success. We like them. We're very happy to receive shares from them. We do think that the significant cash component is a very important feature of this transaction, because it de-risks the completion of this transaction. If there had been no cash, I think we probably might have, you can look at the OrCorp situation with Silvercorp, what happened there. I don't know if you followed that. So that's an unhappy outcome. That doesn't make people look good.
Well, that was going to be part of my follow-up. And Perseus up their stake to 19.9 to spurn Silvercorp's offer, and now they've canceled the meeting for the takeover by Silvercorp. So I was trying to find out if there was going to be any chance that B2 might try to do the same thing.
No, I don't think so. B2 got that stake by accident. Not by accident. That's being a little bit presumptuous here. We bought the Ondundu project from them for cash and shares, so they ended up with this. B2 have actually been very supportive. They've allowed us to do site visits in Namibia. They've allowed us to brag with their mine all these years, and we're very thankful for that. I think they've got bigger fish to fry. I do think they missed. They missed this one. I think B2, this would have been a wonderful acquisition for B2Gold. And I still scratch my head, and I don't understand what their considerations were at the time, and they will have to, let them speak for themselves. But they were supportive in this. They never sold any shares, and I think they will be supportive in allowing this transaction to proceed. B2, I don't foresee any situation like what you had with Silvercorp. You never know. You never know what happens in the back rooms. We are shareholders as closely as we can. We're generally in very close contact with B2Gold, and we've enjoyed having them as shareholders, actually. But it's a pity that they never came, and time will tell whether they agree that was a missed opportunity for them or not.
Well, Heye, how soon before we see you reemerge? How many years do you need to take off with the family?
Oh, you know what? I've got to be honest. They said to me, you will never stop. You must take a break. To be honest, I'm already thinking about new deals. So let's stay close. We've got to focus on concluding this transaction first, and I'm 100% focused on that. But thereafter, I'd love to do the new things. There are lots of other opportunities out there where our skill set can be brought to bear. I think we have a lot of very happy shareholders now that would support us in a new deal. And we'd love to have you guys in a new deal as well. We'll make 100% sure that we notify you early on when something comes up.
Well, congratulations, Heye. Congratulations, Alan. Many years you put into this. And Dave, thanks for joining the show. And to you and all your subscribers, like Heye said, at least you're in the green, right? Especially in a market that's overall red.
Yeah. Well, thank you. I really enjoyed this sort of send-off because it was great to be able to speak freely and in this format. So I really appreciate the support that both of you have given us in all these years. We'd love to work with you guys again. Thank you very much.
Thank you, Heye. Thank you, everybody.
Happy holidays.
Thanks for including me. Thank you. Happy holidays to all you guys.